Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we talk about the income pick, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. To read more about it, please see the description below. Today's income pick, Alliance Resource Partners L.P., traded on NASDAQ under symbol ARLP, has been having a good year. It expects to deliver record 2023 financial results. Its share prices are up around 10% year to date, and its quarterly distribution is on the rise. And thanks to the industry growth drivers, Wall Street thinks the stock is undervalued and could rally additional 60% over the next 12 months. Why the bullishness? As the second largest coal producer in the eastern US, Alliance Resource Partners should benefit from normalized coal prices and record coal consumption. In 2022, coal consumption hit a record high and is expected to stay at those levels as strong growth in Asia more than makes up for declines in US and Europe. According to the International Energy Agency, coal consumption increased by 3.3% in 2022 to 8.3 billion tons. In 2023 and 2024, small declines in coal-fired generations are expected to offset by increase for coal for both power generation and industrial applications. John?
Yeah, thanks, Mo. Even though coal demand fell faster than expected in the US and European Union, the declines were actually offset by increased demand from the two largest users in the world, and that's China and India. While many economies in Asia have ramped up renewable energy resources over the decades, demand remains high in India and China. This year, the two countries could account for approximately 70% of the world's global consumption. Or, put another way, these two countries use more than twice as much coal as the rest of the world combined. For comparison's sake, the US and European Union use just 10%.
Just to give a little bit overview of what's happening in the coal market, after soaring higher during the pandemic, coal prices have normalized, which has made imports more attractive for some buyers. For example, in the first half of 2023, Chinese imports for coal almost doubled. Global coal trade this year is expected to grow by more than 7%, outpacing overall demand to approach 2019's record levels. And all of these metrics are great news for Alliance Resources Partners. John, if you want to elaborate, what does Alliance Resource Partner do? And we'll go on from there.
Yeah, sure. Alliance Resource Partners, as you noted, is the second largest coal producer in the eastern U.S. The Tulsa, Oklahoma-based company generates operating and royalty income from the production and marketing of coal and major domestic and international utilities and industrial users. It also generates royalty income from oil and gas mineral interests located in strategic regions across the U.S. It currently owns minerals and royalty interests in approximately 61,400 net royalty acres in premier oil and gas producing regions. The company currently has approximately 580.7 million tons of provable and probable coal mineral reserves and 1.17 billion tons of measured, indicated, and inferred coal mineral reserves in states like Illinois, Indiana, and other coal-rich states like Kentucky, Maryland, Pennsylvania, and West Virginia.
And John, now let's talk about numbers here. How did it do in the most recent quarter?
Alliance Resource Partners actually announced another quarter of solid results, with management saying it's keeping them on track to deliver another record financial year. For the second quarter ended June 20th, the company announced that revenue inched up 3.5% year over year to $641.8 million. Net income climbed 3.8% to roughly $170 million, or $1.30 per unit. EBITDA, meanwhile, rallied 1% to $249.1 million.
John, though I was reading that it lowered its guidance, what's happening around that?
Yeah, indeed. Management lowered its 2023 production guidance levels modestly to 96 to 97% of its previous guidance range. Despite the slight drop, it still expects production to be on track to help it achieve financial results in 2023. Further out, during the second quarter, it agreed to sell an additional 8.6 million tons with multiple customers for coal to be delivered over the 2024 and 2026 time period. Management expects there'll be more opportunities this year to fill out its future contract book.
I also read that its quarterly payout jumped 75% year over year.
Yeah, during the second quarter, Alliance Resources declared a quarterly cash dividend of 70 cents per unit. That represents a 75% increase over the 40 cents per unit paid out in the same period last year. The company actually raised this dividend every quarter in 2022 from 20 cents per unit in the fourth quarter of 2021 to 50 cents per unit in the fourth quarter of 2022. That represents a year-over-year increase of 150%, which is pretty sizable. It's held its distribution at 70 cents per unit throughout 2023. It doesn't always go up, though. As an energy stock, the company's dividend fluctuates based on supply and demand and where we're at in the economic cycle. If you look at the company's chart, you'll see that it suspended its dividend during the pandemic. Not a total surprise. The global economy was in a recession and demand for oil, gas, and coal pretty much evaporated. Before the pandemic, though, its distribution stood at 40 cents. The current payout is 70 cents per unit, which is 40% above those levels.
And ARLP units have big upside?
Yeah, Alliance Resource Partners distributions are doing well, and so too are its units. As of this recording, Alliance Resource Partners L.P. units are up 13% over the last month. They're up 10% year to date. They're actually down 2% year over year. But further out, the company's units are up 135% since the start of 2020 and up over 870% over their October 2020 lows of $2.10 per unit. Recent moves with Alliance Resource units are certainly encouraging, but the outlook for its units is much more robust. Over the next 12 months, even conservative Wall Street analysts have provided a median target of $26 per share and a high estimate of 28. Either target actually puts Alliance Resource Partners units in record territory.
John, thank you so much for your analysis. Just to recap, Alliance Resource Partners is a great energy company with tremendous long-term growth potential. It has been delivering solid financial results and expects to report record financial results in 2023. Looking beyond 2023, the company said that it is encouraged by growth opportunities being pursued by its new ventures group, the recent increase in forward oil and gas price curves, and acquisition prospect for oil and gas royalty segment. The company is also seeing stability for coal demand over the next several years, with many of its customers projecting significant growth in electricity demand as record number of new manufacturing facilities are being announced to come online over the next several years. That kind of robust long-term outlook is excellent news for both Alliance Resource unit and its ultra-high dividend. That's it for today. We'll be back with another income pick soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.